Hour. Let's kick things off here with a little bit of a recap of what happened today. Interesting morning, interesting day. Uh, had a pretty decent P&L swing today. I was upside down about $7 or $8,000. Came back to break even. That's fine. Made some short-term profits today. I've got some daily P&L up around $770. Not too shabby. A lot of that's actually with oil. Big storyline. We have some, oil prices that have been moving around quite a bit. We'll talk about that. A couple things to note on the index. So this chart, what you see here is Monday's price action, today's price action. We are officially kicking off October, so it's the first month of the new quarter. Welcome to Q4. Yesterday, we had some indecision on the SPX and then some late volatility where the day did about a 61-point move from low to high. And then this morning, we opened up and just faded aggressively right out of the gates and then stabilized through kind of the second third of the day, if you will. And so for my daily profit play this morning, we actually avoided the directional move in the morning. We let price kind of stabilize. I took 2 trades in this choppy area, grabbed 2 trades, 2 wins on SPX. Not too bad. It was certainly not the planned trade for the day, but we kind of adapted and evolved and, just talked through it. So everyone in my daily profit play hopefully walked away with a couple of good profits today, at least a couple of trades. Didn't necessarily overtrade, didn't have to chase, but just a nice little win. And then tomorrow is a new day. One thing I wanted to note from today's price action is we did take out yesterday's low and we also took out last week's low. So probability wise, we are likely going to see price stay below this high. That's what the probability shows. If we go to weekly breakouts, let me show something right here. Let me see. Let me find a couple of stats for us. So base this on the price action. Let me go. Oh my gosh, get out of here. All right. Let's try something else. Okay. We took out last week's low. Now, probability wise, I'm looking for price to continue to stay with pressure to the downside. Now, to what degree, we don't know. I mean, we do have this gap from FOMC, which was last Wednesday to Thursday. And so if price is going to continue to work its way down to these levels, I am looking at some long put hedges on the MES, which is micro E-mini futures and the micro NASDAQ futures, looking to see if we can come back and do some gap fills for the FOMC level. So if we stay below these all-time highs, price just pulling back a little bit, percentage-wise, it's not too bad. I mean, if we just fall back a little bit from these highs, we're talking about a move of maybe 2.5% off of all-time highs. If we were to pull back into the same arena in the NASDAQ, again, NASDAQ yesterday was pretty violent late in the day from low to high. We faded hard today, took out yesterday's low. We also took out last week's low on the QQQ or the NASDAQ. Here is the Dow. Took out yesterday's low. Actually, we did not take out yesterday's low, but price was pretty contained in the Dow. We are still red on the week. We did not take out last week's low or the high. So the Dow is actually still indecisive. Here's the high on the DIA. Here's the low of the DIA. Right now, we're stuck right in the middle. So S&P and NASDAQ pushing and pressuring a little bit to the downside. Russell, this has been down since last week. This is the FOMC high. That's the recent high that the Russell has seen, and we've been essentially fading off that ever since. So again, if I look at the higher time frame, it's all kind of choppy, and that's okay. If I go to SPX here, does it look like the market is selling off a ton? Not really. Could we pull back to FOMC and have a bit of a correction? Of course. Levels we could watch really simply. Watch that trend line right there. So if we have a pullback towards the FOMC lows, look to see if there's some pretty quick support in that area. If it breaks this aggressive trend line, then I would be looking for this low, maybe this thing rolls over and tries to test this level, test this area. This would be a bear trap, in my opinion, if we end up seeing some positive action off these levels and then back up towards all-time highs if the market's going to stay resilient. A lot of things we have to market to digest. We know this. Employment news comes out this week with non-farm payroll, unemployment rate. average hourly earnings. We have unemployment claims on Thursday. We have JOLTS job openings tomorrow. Or was that today? Is that today? Hang on. Let me double check that. No, I think JOLTS is tomorrow. Let's find out. Nope, JOLTS was today. Yeah, we had today. So today we had the manufacturing PMI numbers out of the U.S. We had the JOLTS job openings came in better than expected. We had ISM manufacturing prices softer than expected. So that's a pro-inflation thing, but the lower number in the manufacturing PMI is still showing a contraction and a manufacturing slowdown. Thursday's PMI is probably a little bit more important because we have services, which tends to be, number one, it's above 50, which is going to be a big number and barrier to still stay above. And then we also have the unemployment claims to make sure that they're still steady or trending, somewhat lower as we come into non-farm on Friday. So based on where we're at right now, the week has turned red. That's what this shaded background is right here. I think there's room if there's going to be a direct push this week. There's room as we took out last week's low. There's room to push down towards the previous week's low, which will incorporate that FOMC bottom back on the 18th. And that low is right around 56.17. If I go to the SPY, look at the FOMC level, that gap fill is going to be around 561. We go to the NASDAQ or the Qs, that gap fill with FOMC is going to be around 471. And we look at the Dow, FOMC on the Dow is around 416 on the DIA. And the Russell has already taken out the FOMC level because that was what actually created this recent top. Okay. Hey, Ken, how are you? Hey, Gary, good afternoon. Good afternoon. All right, let's go. Good afternoon. Welcome to another final hour session. And happy Tuesday. All right. I talked about, I mentioned oil today. That was actually the big mover today. So take a look at our indexes, like 52 minutes before closing bell. S&P's down 0.5%. We have responded a little bit off the lows. It was certainly in, 1% correction territory or roughly that. Let's go back to the SPX or SPY here. So on the day, if I go from yesterday's close to today's low, the S&P was down about 1.37%. Once we started trading this morning, it was a slight gap lower, aggressive move to the downside. There's 1.29% to the downside. We've pulled back, and the market itself from yesterday's close to today's price action is down about 0.6%. You can see here 0.58 in the SPY, SPX down 0.64, but it's down, stabilizing, pulling back. It's basically the halfway point. The pressure, I would say, as long as we're holding this high, if we start to see a lower high forming tomorrow and maybe breaking some fresh lows, we might have more continuation to the downside. So I'd say the pressure is going to be a little bit bearish if there's any direction at all, but seems like right now the last 2 days the market's been a little bit antsier with some direction, and right now that's leaning to have more pressure on the downside. Let's talk about gold, silver, everything else. So NASDAQ down 1% plus today, 1.04 on the Qs. Dow's pretty flat at 0.14 to the downside. Russell down over 1%. Volatility took a big spike up and has already retreated. We had the VIX up to 20.79. High today, 20.73. And a little bit of higher volatility. We were wondering if we're going to get a bit of a volatility event, which this could be one of them. That's a big spike in volatility on the day. Some of it's already faded, but the candle itself from a low to high is up 24.98%, and it's faded back to about a 10% rip in volatility today. Is there more to come? Well, if the pressure remains to the downside and the markets start breaking some fresh lows again intraday or breaking last week's lower trying to fill that FOMC gap, then yes, the volatility index will continue to probably push higher. So we'll see how that plays out. I'm not long volatility or anything right now. I'm not short volatility. My main actions today. So I had SPX. I had 2 trades, and I had 2 wins. I also had a Pfizer trade where I did it's a diagonal spread, and I rolled out by 2 weeks for about $200 credit. And I also put in a Nike earnings play, which Nike is earnings today after market. So today, AMC is after market close, and I'm looking at a trade that cost me about $5.60 debit. I'm looking for an $8 to $10 expected move on Nike. So I bought the 89 put, I bought the 89 call, I sold $10 wide, and I'm looking to see if we can get. I need a $5.60 move. If I can get $6.50 to $7 to $8, that might be enough. And if I get a decent pop on Nike today, like after market, we open up tomorrow morning with a decent gap or a push higher lower, then I will take some profit on Nike. So I did take that and post it in my alert section for the Pulver alerts in Discord. Okay, SVXY still hanging out this one, holding long shares and some puts. Dollar index. I've been warning traders, don't be sucked into this bear trap because I wasn't trusting the dollar going to the downside. You can see the last 24 to 48 hours, the dollar's pulled back a decent amount. I still like fading the dollar. I really do. I mean, if we're going to fade the dollar, I mean, up to this area with some past support becoming resistance, look for some confirmation. The next big spot would be somewhere up here around 103.50 or so. Um, yeah, I would just keep an eye on this kind of 102.50 to 103.50 zone, looking for confirmation to start to sell. Selling a U-turn, stop losses above. Look to see if the dollar gets faded. This might also continue to be very choppy. We might just have some type of pullback in here, wait for a trend line break, let it be choppy, let it be messy. But if it rolls over here, stop loss above, and we look to see if we can retest the lows or go lower. I've repeated this so many times, it almost feels like I shouldn't have to say it anymore. But I always have new people watching and questions being asked on the dollar. I like selling the dollar. The way that I'm going to take advantage of this is probably not through currency trading. All right. My weakness on the dollar is be long the stock market, be long gold, be long silver, be long oil, be long everything commodities. Okay. Be long equities, be long US and non US. This to me is a much better way to trade for dollar weakness. So if we see dollar weakness, I'm just long so many other assets that will benefit from a weaker dollar. Because I think if you look at every individual currency pair, I still don't like the way the structure's setting up on Aussie dollar, Euro dollar, pound dollar, New Zealand dollar, dollar CAD, dollar Swiss, dollar yen. I truly could care less. The only dollar cross I'm in right now for currencies is dollar Swiss long, and that's it. And that's mostly a carry trade for me. And just trying to sit at these lows. I put in a pending order on the dollar Singapore, 121 and 120. That's a long ways away because the dollar Singapore is trading like 128 or 129. We're trading at 128.75. I'm still a long ways off from the levels that I want to buy this thing at, and I might not even see them. So this is way out there in the distance. Other than that, dollar Swiss. Okay, lots of chop in here. If the dollar Swiss gets above 85.50, then maybe we have a retest to the upside and we start to see a little bit more swap action. Good support at this 83.50 level. Maybe a range trade back up towards 91 or 9200. Dollar yen, I'm staying as far away from the dollar yen as I possibly can. This thing can't make up its mind. We keep, baiting those sellers to sell the breakouts, and they're getting faked out. We see buyers that are getting flipped around all the time. We see the Japanese yen. One time it's weak, and one time it's strong, and it's one of the more wild currency pairs. If you're looking at a currency strength chart, just look at today. It's not as bad as we've seen in the last month or so. Certainly since July, we've had a ton of Japanese yen movement, but we were one of the weakest currency pairs today to then one of the strongest to then fading back in. The Swiss was strong and faded back in. The dollar was strong and faded back in. The CAD stays strong. Oil's on a big lift off today. Aussie's been choppy. Euro, pound, and New Zealand all weaker. I mentioned this morning that we have some risk off currency trading, and that translated, pretty straightforward into selling the indexes this morning. Okay, we go to oil. Here's a big, ridiculous spike on oil. I mean, just look at this intraday price action. We had oil hit 66.30 or so today. But man, look at that rip. So oil, a big old squeeze to the upside, 8.48% from low to high. That is an impressive rip on oil. Let's go to the chart here. So, again, major candle from low to high. I don't know if this is just disruptive. I don't know if this is starting to signal some buying pressure. We do have some, Middle East tension going on. Oil prices expected to trend higher amid rising Middle East tensions. Sugar prices supported by crude oil rally. Oil futures lose momentum, but still rise on Iran's attack. So this isn't a great thing to be dealing with, right? Oil prices rise. We got Middle East tensions. There's a geopolitical aspect to oil trading that can be very tricky for risk on, risk off trading. There's supply and demand. There's OPEC versus non-OPEC. It's a lot of stuff to factor in. For most of this year, I've essentially just been trading support at 60 to 65, resistance in the 80 to 85 to 90 zone, and I'm just kind of waiting to see, like, does this area hold as support? Because if it does and prices rally, then okay, fine. The one thing we have to ask is, if oil is going to go up, will inflation follow? That's what we don't know. So if oil prices from these lows are starting to go higher, are we going to start to see an uptick in inflation? Inflation is also using lagging metrics. So when we come not to this week's news action, but next week, we do have CPI news next week. I wouldn't be surprised if the CPI news from last month's print is one of the lowest on record. But in the background, we could still see inflation actually rising. And for future prints, we might not see lower lows in inflation. So if oil goes up, I have a feeling that inflation is going to follow. So something to definitely keep an eye on when it comes to what this Fed is trying to accomplish by getting inflation back down to 2% or below 2%. If oil is going to rally 10% in a day and all of a sudden we start talking about oil back to $80, that's going to get a little bit stickier when it comes to that CPI, right? And we use core inflation, which is excluding food and energy, but pay at the pump and everyday prices and things you buy at the store, groceries and gas. If we're paying more for that, people notice, and that's sticky inflation. So something to definitely keep an eye out for. Crude light, we're up to 70.22. Still a lot of volatility on the day. We have CL with a low around 66.40 and a high around 5.6, or I'm sorry, 71.99. So another like 5.5 point move today. Pretty big, 8% from low to high on the candle. Will the level hold, or is this just a last minute squeeze and we're still just dealing with some chop? I don't know, but we're going to find out. I hope it's support because I see good technicals here. And if it is, great. If it goes up, good. I'll make some money on some credit spreads and some ratio spreads and things like that. Natural gas also continues to push higher. I wish I was participating more in natural gas, but I didn't get filled with the level I wanted. I was trying to get in at 175, never came back to the price I wanted, so I'm not in. Oil is something we need to watch this week. Gold. We had a decent 2-day sell-off on gold. Today it's up. I would imagine this is also up amid rising tensions and geopolitical risks. So there you go. 1% as conflicts in the Middle East escalates. Gold is up. Are we break all-time highs yet? No. Is gold still able to pull back? Probably. Here's a really simple way to look at gold. Here's a daily chart, 50 moving average, 100 moving average, and a 200 moving average. We're not incredibly overbought yet. We're not incredibly overextended. We haven't gone that long. But percentage-wise, if I go from high to low here, we did stretch around 15, 16% above the 200 moving average, and that's a decent distance. And then right here, kind of the same thing. We're about 13.5% overextended. Now, if we go back in time and I just kind of look and see, how these big moves away from the 200 fared, we had this move here that if I just go straight down, so straight down, we ended up getting about 18 to 19% away. So it's a couple of numbers I'll look at. If gold stretches about 15% away from the 200 moving average, that might be a percentage like rate of change that causes a reversion. So I'll kind of keep that in mind, like maybe this like 15 to 20% window. If we're, 18 to 20% stretched higher than the 200 moving average, I'm going to look to see if we end up snapping back towards these supportive lines. So the 50, the 100, 200 offering some support. Last time we see a big stretch away move, again, you can see it's few and far between. Even right here, let's look at a percentage from that high to low. It's probably not that bad, about 10%. Nope, not enough. This one, maybe. This one in here. So this low stretches away from gold around 28%. Wow, so that's a downward move on gold. We stretched at this point 28%. But what's interesting is look at what that did. That type of stretch and capitulation getting 28% away from the 200 moving average basically formed the low, and price just stopped, went up, stopped again at the same support level, and we just had a sideways move where that reversion did actually take place. So here's what I'll say. To put that into something that's a little bit more actionable, right now we've seen gold in a nice, healthy bull market making higher highs and higher lows. If I look at let's just take the 200, for example. I mentioned to traders this week, I would like to see an opportunity to buy gold at a dynamic support level. That would be my 50 moving average or my 100 moving average. All right. So if we start to see gold, I could see it still getting to like 20% if it's 20% extended. Okay, it doesn't mean I'm calling the top, but I would say it'd be more limited to the upside before we start to see some type of reversion. So if we see a pullback coming first, it kind of checks the box of, all right, we're getting a pullback here. What is left in the market? And if we get another run higher, if we have some big capitulation, I'll just make a note here. Anything around like 20%, and then that extreme we saw about 28%, not calling the top. But if we start to stretch away, that gives me a little bit more confidence to see that I should probably start moving stop losses and trailing some profit. So if we go higher, I'll look to see how much away, or how much distance do we have from price of gold into our 200 moving average? Does that make sense? All right, so that's gold for right now. GC, same thing, getting some pullbacks. Hopefully, it's a 50 to 100 pullback zone. If we pull all the way back to the 200, I do like buying more gold. I'll probably buy it through GC. I'll probably trade options through GC, which is gold futures, and I'll also trade GLD. Silver, looking a little bit better. I have a chart alarm set at 26.15. I'm looking to see if we can break these recent highs at 32.78. My first measure move on silver is still up at 35.88. SI, same thing. If we have some pullbacks and dips, we've seen some decent bounces off the 50, the 100, the 200. And if we draw let's say we have a channel, something like that, I'm still looking for more upside on silver. So there's my measured move, and that's why I'm holding long. I have SI as well as SLV. Bitcoin, decent pullback the last 2 days. 1 day of indecision, and then 2 decent days to the downside on some geopolitical pressure and some rising tensions. And what does that cause? A little bit of risk off trading, and you can see that reflected with dollar going up, Bitcoin going down, the stock market selling off, Bitcoin going down. Currency wise, same thing, risk off trading with safe haven currencies at the top of the food chain today. And so Bitcoin is at 61.9. We're still not doing any massive damage, below 50K. I wouldn't mind just seeing more accumulation and more chop in this Bitcoin area. 50,000 is fine. 52,000 is fine. I wouldn't mind scooping up some trades off these lows. If we break and go higher, great. I'm holding breakouts. I'm holding a bunch of option trades. But that's about it for right now. BITO, I put in a 16 and 15. These are cash secured puts. I collected about $3 and we'll say $3.55. I'm willing to own the shares of BITO. IBIT is my other one. This is pulling back. This is a little bit tighter correlation to Bitcoin. This is the BlackRock ETF. We don't have options yet, but it has been approved by the SEC. There's still a final endorsement by the CFTC in order for these options to go live. When that is the case, I will be doing a lot of option trading around IBIT to lower my cost basis. MicroStrategy, I had a good discussion this morning during my A1 trading session. Somebody's asking, hey, Chris, I'm long MicroStrategy at $170.50, and I sold the covered call for $6.40. So we had a little lesson on, tracking break evens and one way to quickly get that stock repaired, putting a 162.50 or a 165 covered call, and all of a sudden you work your cost basis down to 160 or 159 or 158. And within a week, you can see if MicroStrategy gets called away for a nice $3 to $5 profit. So I do have some income plays on MicroStrategy. I've got some ratio spreads and bull put spreads. If this sells off a little bit more, I will do the same thing. I'll probably just add more income trade. And I also wouldn't mind, I don't know if I'm going to do this right now, and just buying shares. Now, I probably won't trade 100 shares just because I've got exposure elsewhere, and it's a nice income trade. Every time I place a MicroStrategy trade, I'm getting like $300 to $500 in income, sometimes $700 in income. If I own the shares, I'm looking to take ownership like under $80, and that would be a massive discount from where we are right now. So I'll stick with the income side of things on MicroStrategy. The Ivy rank is pretty high. There's a lot of good premiums on this one, but I'm really only interested in trying to buy it nice and low or collect some income. I suppose, let me see here. If I look at these lows, that's around $100. I already have this trade running, but let me just double check this one. I might see if there's another expiration I could go to on MicroStrategy. So MSTR, I have a 100 by 95 by 65. That's a 111, and then I have an 85 by 80, which is a ratio spread. Now, I do have some gaps to fill. I mean, I've got a January expiration, a March expiration. Let me see if I can do something here on MicroStrategy out to December. So that's 80 days out. January, I already have an expiration. I could go February and fill the gap in. This might not be a bad play. So I could fill the gaps in with expirations from January, February, March. Maybe look at, so the Ivy rank has gone down to 40. Let me see something here. That is a wild expected move of $77 from now until February. That's a big random move. Let me see if I can do like a 95 by 90. And then can I get an income play to cover me for at least $1? And the answer looks like yes. I can do an $80 and collect some nice income there. That's a 111. Would I be willing to own more shares? Maybe. If I go lower, let me see. Right now, that's a 7 delta. Man, it's so tempting to go to like $70. There's a bid price right now. I could get $2 of income Now that's going to require $3,000 in buying power. I get $2 of income by February. Do I like this trade enough to take this trade? Let me see here. If I go, let's go 85 by 90. 90 by 85. That's right below these levels. We'd have to have like a pretty decent crash in this one. Honestly, I don't even know if I would. I think I'm just going to do this. I'm willing to own the shares at $80 and collect $4 on that. And I'm willing to own the shares at, let's say, $70. So if I get assigned by February of 2025, if I get assigned any shares, now this does require some buying power here, but what I could also do is create a credit spread. So if I did the 80 by 70, let me go to like the 60 here and put 2 contracts in. So that cuts the buying power down a little bit, but I'm cutting my income down as well. So instead of $6,000 is $2,707. Let me see something. If I get rid of this trade, so I could do a 80 by 70, collect 715. If I did take on any shares, I would own the $80 shares around $75.90. I'd own the $70 shares around $67 and change. That's not too bad. Let me see what that would be. So if I own shares at 80 minus 4.15, I'd own the shares at 75.85. Let me write this down. So 75.85 on one contract, and then 70 by 2.83, 67 plus 75.85 divided by 2. I'd own the shares at 71.51. Would I be willing to own shares of MicroStrategy at 71.51? And that would be a discount of around 56% from current price. Yeah, I'd be willing to take that trade. Yeah, I'll take that trade. All right, so 68, let me see what this is in my, let me check out my margin accounts here. So about $3,300 in buying power. That's not too bad. I'm going to take this on 1, 2, 3, 4 accounts right now. So let me add up the bid prices. Let's see what we have. So 4.15 plus 2.89. I should at least get $7 for the trade. I'm going to try to go off this mid price and collect 720. So let me try this trade right here for 720. So this just below the mid. 726 is the mid price. If I'm just selling puts, I should just get the bid price. I'm trying to get a little bit extra premium here. The bid price is actually 713. So this might get filled here at 720. Let me see if I'll go up here to 725. Let's find out. Get a little bit extra premium towards that mid price. So let's try this one. Filled at 725. Very nice. That one's not filling at 725. I'll take it down a penny. Filled at 724. Okay, so not bad. I'm going to put that in my tracker. This is a trade on MicroStrategy. I'm filling in the gaps on some of those timely expirations. So this is a 2/21/25 expiration. Selling the $80 put for 4.20 and selling the $70 put for 2.95. The net credit was 7.25 credit. And I'm willing to own shares. And I'm putting this on my margin accounts. All right. So I'll get that trade posted in my Pulver Alerts Discord section. I'm going to add this in here as another section. So sell $80 put, sell $70 put, 7.25 credit, willing to own shares. I'm looking at a 50% to 75% take profit if wanting income. So if I just place the trade and price is, oscillating here, then we'll just let time do its thing. Maybe we have a nice support level around 120, 110, never really violates our positions here. And we'll see if there's something good that comes out of this 725 credit, maybe cutting it in half and getting, $3.50, and you can walk away, just grab the income and move on. Especially if that happens in the next 60 days. So rather than waiting, and my expiration is 143 days, if I can take about half that position and get half the profit, I'll just do that. So, all right, I'll put that in the Discord channel here momentarily. All right, so that's MicroStrategy. Ethereum, looking to see if we get back above. Let me get rid of these moving averages here. I want to see if Ethereum can get back above. It's around $2,800, $2,814. I need price to get back above it. Copper, pretty wild couple of days on copper. Lots of volatility. I'm looking to see if we have a pullback in here for credit spread on HG. I'm trading copper futures. Japanese yen, no interest in that right now. The Nikkei, all sorts of choppiness. I think the Nikkei is going to be a challenging index to watch it take out a high or low. I think right now we're just going to deal with a lot of this. A lot of indecision. Be careful. I wouldn't mind buying the Nikkei. This was a 27% discount. Obviously, I didn't buy it when the Japanese yen was unraveling. That was just a crazy move. And we had the largest 2-day move ever. We had one of the largest 3-day moves ever. And my instinct was not, I'm going to buy the Nikkei. I was like, is the Japanese yen going to break the stock market? That's what it seemed like was happening on August 5th. So now that things have kind of stabilized, I'm not that interested in doing much of anything outside of watching to see, okay, we have some highs here. Maybe we have some lows here or some slightly lower lows. If this is going to mess around with some type of broadening pattern, I might look at some long positions on the Nikkei at decent discounts, but not interested in buying fresh highs. If we come back to the lows, I'll probably take a stab at buying the Nikkei nice and low. FXY, this is the Japanese yen. I'm holding this one out to 2026. EWJ, this is an ETF that I'm looking to trade the Nikkei with. It's sitting here near all-time highs, but I'm going to look for some pullbacks. The DXJ, this actually looks a lot like the Nikkei 225. This is a way to trade it if you're looking for ADRs essentially. So it's a Japan hedge equity fund. Price is 106. It's a lot cheaper than the index, obviously, but you can see the price action. It's much more in line with something like this. So your Nikkei 225 versus your DXJ. I kind of like this price action. So if we came back down to, let's say, $100, or maybe even coming back down to this August 5th low, I might be looking to get long. And I mean, if I can buy this thing, let's say $90 and take it back up to 116, it's not a bad trade. That is not a bad trade. So I don't think I'm going to get the best entry, but if I bought it at like 92, goes up to highs, and it's a 28% return for an index, or at least correlating to an index, that's a pretty good trade. The DAX Germany is up to recent all-time highs. We're pulling back a little bit the last 2 days. The FTSE's been sideways and continues to be sideways. There is some pretty good structure on the FTSE. This is the UK 100. So if we're just going sideways, one thing to keep an eye on is if we just get a clean breakout. This goes sideways, this goes sideways here, this goes sideways here. We could just have lots and lots of chop. But if we end up holding this support and getting a nudge to the upside, the FTSE could end up going higher, maybe. If it stays sideways, then no, I'm not trading it. Honestly, what I would like to do right now is see if I can get a strangle going on the FTSE. I don't know how I can trade the FTSE. Let me find out. FTSE. Not found. Can I go UK? Let me go to it. Let me see if there's an ADR for the FTSE. ADR index series, London Stock Exchange Group, product summary. Let me see. Full list of United K ADRs. Nope. How can I trade the FTSE? Okay, if your broker offers U.S. stock exchanges, you can invest in the FTSE 100 with ADRs, shares of the largest British companies. Finder.com, plus 500, TradeStation. That's not what I'm looking for. What the heck? Let me look at Investopedia. If anybody knows if anybody trades the FTSE from the U.S., let me know. I'm just looking if I could put an option trade on here and do like a strangle. That actually would make some sense here. So let me go. Okay, U.S. equity ETFs. Let's see what these are. Yeah, the FTSE 100. What the heck? How do I trade that? That's weird. Hmm. Nothing? All right. I'll find it later. But yeah, I'm thinking of just basically doing I could do an iron condor, which would be I sell above and I sell below and I create, defined risk. And if that gives me a nice little profit in the middle and price doesn't have to go anywhere for 30 to 45 to 60 days, that's pretty optimum. That would be not a bad play. It's also defined risk. If I wanted to take on more risk and get more credit, then I could do a strangle, which is sell a call, sell a put, and just try to massage that for maybe a quick, like 25% take profit, maybe a 50% take profit. So anyway, I'll try to figure out how to trade it. But this has been sideways enough that I would think for the next maybe 30 to 45 to 60 days, there shouldn't be a crazy movement. Now, I say that, and I don't know if there's going to be just some disruption going into the U.S. election here for the U.S. president on November 5th. I don't know, but I don't know. We'll see. All right, HSI. This is the Hang Seng Index for China. Today, we finally had a pullback day after basically just a straight rip for the last couple of weeks. This has been, ran up here about 27%. Let me do this. I'm going to put a Fibonacci here on this recent low to high, and I want to look to see if there's any dips. If we get a 30, 38%, maybe looking at some credit spreads in there. Something at the 50 point, some credit spreads in there, looking to see if we retest the high. I would like to see that these stocks in China are going to form some type of bull flag. So rather than it going, straight up and straight down, obviously I don't want to see that. I'd like to see more goes up, has some, pullback retracement, maybe some sideways accumulation, and then look to see if there's more upside coming. So I'm still looking for a bull flag, but I'll watch these fib zones to see where can I get some pullbacks and then possibly put in some credit spreads if we're falling. Okay, so keep an eye on that one. EWZ is Brazil, Apple. Actually, this Hang Seng, this needs to go. That's an index. I've got all the Chinese stocks down here. So I did HSI on this chart. Same type of thing. Let's look at there for an indecision candle. If I go to Alibaba, nice. Alibaba is freaking cranking to the upside. And where's my low at? I would almost have to put the low right here. If I put a fib on this one, I mean, we're not really solidifying the top yet. So I might have to keep making an adjustment, but you can clearly see some gappage. So if we come back and, try to find this gap around the 236 or 382, we find this gap here around the 50 to 618 zone. To me, those are good spots to look for some pullbacks. So I did put in a 110 by 105 for 255. Let me see what that's trading for right now. So Alibaba, it's probably maybe 30 to 50 cents in profit. I do have some shares they're running, collectively my Alibaba position's up around $12,500. Let me go to an individual stock here. So the 110 by 105, that's a November 15th expiration. My 260 fill is up to 225. I'm up like 35 cents. I'm not going to close it yet. If I can quickly get this into a 50% profit, I might protect it and just be done with the trade. If I get pullbacks, I'll just hang in there. The shares that I have are still running. I'm not going to touch the stock or get rid of it until we hit either this 121 level, which is another $9 higher, or we run up here to 130, which is my swing symmetry. So I'm still watching and eyeing these levels. It's nice to see that China stocks are up again today. Baidu's up 4.4%. So we are back up again, the 110 by 105, collected 275. We're back to these highs. I'm covered on Baidu to 115, 125, and 130. And I'm trying to let those profits run a little bit. Those are out towards the end of the year. My measured move is all the way up here towards 155 and 157. So I'm hoping that I'm not in the way of Baidu going higher, but obviously my 125, 130 could be in the way. I would be willing to roll it a little bit, but I don't want to roll it for a debit. If I get called away for 40, 50 bucks a share, I'm okay with that, and I'll let it run. But there's still another, I would say, $15 a share, $20 a share to let this thing run and get it called away. And there's other ways that I've got some trades running for full profit as well. FXI. This is large cap China ETF. We're up to some fresh highs today. I put in a 31 by 30. We're trading at 32.99, 57 cents credit, and then 27 cents credit. I've got these in. Let me go to the stock price here. FXI. I did the 30 by 30, 30.5 by 30, and then the 31 by 30. So this one is, I got filled for 27 cents, which is a $270 profit. And right now it's trading for 12 cents. Oh, not bad. That's not bad. That's over 50% profit in what, 5 or 6 days of trading? I took this on the 24th. That's not a bad trade. Now, the question is, can I get filled at 12 cents? I don't know. And am I that worried about it? Not really, but that's a little income play. Would I be willing to own some shares of FXI? That's not really why I got in the trade. I got in the trade for some income. I think I'm going to go ahead. Let me see if I can get out of this trade. So I took in 27 cents. I mean, the mid price shows 12 cents, but you can see that the bid, ask, and mid are really wide, 20 cents to 12 cents to 45 cents. I'd like to go after at least half the profit's going to be around 13.5 to 14 cents. So if I take a 50% take profit, instead of making 270 bucks, I'll make 135. It's income. It's fine. FXI right now with the trades that I'm in, I'm up around $1,100 on this account, and overall my FXI position is up around $7,500. So I'd like to see some more upside, but what's nice is I'm still running with the shares. I do have shares of FXI. They are looking to get called away at $29 by, the end of the year. That's a long ways out. I might just end up taking the profit. So I'm not going to roll it necessarily. I don't want to roll it out further in time. I might just end up taking the profit. So let me take a look at these. Today we've got about 17 minutes for closing bell. Do I take the profit today? Let me find out. So if I can get filled here and take 50% off now, what's this total going to be? So I've got around 57 divided by 2 is 28. So 57 times 5 is $285 plus $270. So if I'm in full profit on FXI and those credit spreads, I'll make about 555 bucks. Now that's out to the end of the year. Do I want to take 1,000 shares and 500 shares? Not really. So, even if I take half the profit now, if I can, instead of making 555, let's cut that in half. And I can make 277. I can do that in a week instead of waiting all the way to December. That's not bad. So let me see what these are trading for. Like I said, I know the bid ask is wide. Now it's trading for 15 cents, 16 cents. I guess I'm going to wait on it today. I'm not that interested in taking profit now and only getting like 9 or 10 cents. So I'll sit on it. I'll sit on it a little bit longer. If that debit gets down to, let's say, 10 cents or less, I might just take the profit. And so anyway, I'll address that one. What else do we have? KWeb. We're up to 35.89. I do have some shares of KWeb. This should be getting called away for profit. So I'm up a little bit in profit here. Maxed out at $12. What's this trading for right now? $9.60. Let's see. KWeb still has some upside potential. Yeah, my break even's 30.66. The problem is it's getting called away at 29 or 30. Let me see this one. So this is a 23 by 35. Yeah, I need a little bit more time in this one. All right, any other stocks here? MCHI, this is another index play. This is MSCI with China, and then there's MSCI non-US, there's MSCI non-China. This one, I'm looking to measure this thing up towards $56. Then JD at 42.67. This has been a nice run. I actually bought this live in one of these final hour sessions at $1,500, and it's already up about $10.18 a share. Not too bad. So JD is also cranking up there. Right now, the portfolio is up around $12,200 on JD. Not bad. So Liking the crank to the upside, it's fine. Let's go with it and try not to get in the way and try not to choke off those profits. And we'll see if China just wants to keep ripping. Any questions, any charts, anything you'd like me to review before I wrap things up here for the next maybe 5, 10, 15 minutes? Just taking a look and see any requests on the phone. No. Good. Okay. Let's do some currencies of interest. I mean, we did the indexes, U.S. market. We've got about 13 minutes. SPY is down about 0.81%. Q's down 1.41. Dow is fairly flat, negative 0.3. The Russell's down 1.42, pretty much the same as the NASDAQ. Interesting correlation there. Volatility index spiked up a decent amount today, did fade. We were as high as 20.72, but a slightly higher volatility move on the day. The dollar index also coming off the lows with some risk off trading. Oil, big day in oil, 7-8% swing intraday, a lot of volatility. Is it meaningful? Is it noise? I'm not sure. That's an 8.46% move from low to high. That's a lot of activity on oil today. Gold still waiting for a bit of a pullback. Silver, hopefully the pullback is fairly contained. I just want to see it bounce off the backside of the trend line. Bitcoin watching, added the trading with MicroStrategy. And then watching the indexes here, watching China. Yield curve stuff. The 30-year mortgage rate for the U.S. is down to 6.08. The 10 and the 2-year is disinverted by 15 basis points. So we're up above that zero line. We are coming. I mean, this is interesting. I mentioned this. I think it's important to see that the yield curve possibly gets reinverted for the stock market to continue to go up. If we look back in time, if I go back historically, let's see how far back I can go on this. How far back can I go? There are periods like this when we go inverted to, I mean, this is a crazy example back in the 70s and 80s, from deeply, deeply inverted to disinverted to reinverted to disinverted to I mean, are we going to face something like that where it's inverted to disinverted and a little choppy? Is it right here? Is it right here? Is it right here? I mean, I don't know, right? Briefly, one of the longest inverted yield curves we've ever had. We've been disinverted now for a few weeks, about 20 to now it's 15 basis points, but it was 20 basis points. I'm wondering if this comes back down. If it does, I think that's how the stock market can still justify going higher, along with other things. Is just labor market's getting a little bit tighter, job numbers are improving, and if we have inflation going down, then that's one thing I'm watching. The other thing I'm watching is inflation, as we talked about. Here's a third-party measurement, trueflation.com. I did notice a pretty big spike off the inflation lows. Look at this. So again, I'm not saying this is what CPI actually looks like, but from a third party level and just looking at the overall trend and rate of change, look at how this thing bounced off the middle right here. So once we came down to this low, look at how this thing has bounced, and we've seen a steeper move up where it's like there's something that is causing some stickiness to inflation. So we came down to these lows here. Next week, I think next week on Wednesday, we do have our CPI number. I wouldn't be surprised because the CPI is lagging. If the CPI actually prints, remember what the print was? We went from 2.9% down to 2.5%. The market got all excited about that to continue to make higher highs. I wonder if we go lower and print like a 2.3 or a 2.2, and then the market gets all excited. But in the background, as this prints, we're actually seeing this trend higher. So what this would tell me is we might be coming into the lowest print of inflation of the year. And if I see this real-time reading, again, I know that they calculate it differently than CPI like we see in the economic calendar. But if this is trending higher, and I know that's an extreme example, but if we're trending higher, this might be the lowest print we have for a while. So when we come into November trading and we print for October CPI, is it going to be higher? Maybe. So it's going to be interesting how this whole year finishes up, because employment has to be really, really good. Inflation has to dress to impress, and the stock market earnings have to come prepared to beat on top and bottom estimates with forward guidance is optimistic. If that doesn't happen, this market can definitely roll over on itself pretty quickly. Because if those numbers disappoint, the Fed is not going to be as accommodative what they're hinting that they will be right now, right? The Fed is cutting rates aggressively. We'll probably still cut rates through the rest of this year, but going into 2025 could have a very different tune. If inflation's not better, if job numbers aren't getting better, if the economy looks like it's slowing and rolling over, the Fed is not going to be as accommodative trying to cut, especially with inflation potentially going higher. Okay. Have you seen the correlation between price of oil and price of inflation? Well, yeah. I mean, look at what's happened. I mean, let me take this chart right here. Take a screenshot of this chart right here. Okay. And let's overlay this. Let me see if I can overlay this with oil. Let's go oil. Let's go US oil. And then over oil, let's overlay. I don't want core CPI. Fudge. Let's do something like this. Is that right? Now let me get rid of this. Try this again. So here's CPI. Let's overlay this. And then core CPI. All right. Let me see if I can get these to line up. So US CPI, let's go new pain. And then we'll go USC CPI for core, new pain. And let's see how these trends look. Let's see. Let me go percent. That's not it either. Doggone it. I'm just trying to look and see, if I can overlay it with oil, if this move in oil, as we went from high to low, if we start to see inflation doing the same. Like, look at this right here. Core inflation right there. Even though oil is supposed to be excluded, look at what core inflation did. From this high to this low, that's pretty much spot on with the top in oil, right? So if oil catches a bid down here, I have to wonder if this all of a sudden pops up. And if we're flooding money into the markets and we're adding global liquidity, that's going to spur spending. Spending's going to spur inflation because you have too much money chasing too few goods. That's inflationary, So I'm just saying, I don't think this Fed has inflation completely nipped. And let me get rid of these now. I have, if you've ever seen like the 3 waves of inflation, let me see if I can find this here. 3 waves of inflation. Just find an image of this. This seems about right. Nominal, July. No, that's not right. I'm looking for like these cyclicalities of inflation. When is this? 1946, 2020. No, that's not right. I wonder if it's this guy. I think it's Yardeni. Search. Inflation too high. Let me see what he says. I know that this is a podcast that I listened to. We've got inflation still too high, but gliding down. I'm curious when this was written. CPI for goods, personal consumption. Let's go our charts. U.S. economy, energy, stock market, U.S. consumer, income, wealth and debt, credit markets, inflation. Here we go. Let's go. Let's see what consumer price inflation looks like. Go to CPI. See what he shows us. So if I can find the podcast, I'll share it in my Discord. I think it was on. Oh darn it! Not excess returns. It was some other podcast. Anyway, I'll find it. Selected services, transportation services at the highest. Durable goods trending lower. Non-durable goods. Consumer price index goods. Big crazy spikes since 2020, returning to lows. Headline versus core, you can see that they're starting to catch up. Headline inflation has been trending lower faster. Core CPI didn't go up as much, didn't go down as much. That's what's excluding, your food and energy, rent to shelter. super lagging indicator, but getting better. Headline with versus without shelter. Headline and core goods, headline core goods. Food and energy. 1914 to present for the CPI. I mean, man, 1920s inflation would have been, I think people would go nuts if they had experienced that today. But times have changed. I mean, it's not like things are great. Stuff's expensive and people know it, and the consumers somehow survived the last 4 years with higher goods, higher prices, unaffordable housing index. None of this means we have to have a recession. It just means it's going to be different. Whatever it looks like, it's going to be different. CPI 1965 to 1985. Okay. 2008 to present. This is CPI. Look at this crap. Just going up since 2020. CPI total, CPI services, CPI goods, CPI minus shelter, CPI rent of shelter. Trending higher since 2020, trending higher. The only thing that's been stable. Look at this. So we've paired off the last couple of years, trending higher, trending higher, trending higher, trending higher. Stuff is still expensive, and you know it. Motor vehicle insurance. This is a joke. So freaking expensive now. Look at this. Yearly percent change. Does anybody have to put in a new policy on their car or truck or motorcycle or RV or anything? Progressive. They were insistent that I change my entire policy because I was changing states, and it literally doubled the cost of my policy for an older vehicle with more mileage, and somehow my policy is twice the price. Thanks for nothing. So I can't wait what homeowners insurance looks like in 2025. Anyway, all right. I'll try to find that podcast. Basically, what I'm trying to look at is this. It looked like this. We have the first wave of inflation, and we come back in, and this is almost perfectly correlated with what has just been happening. The Fed's starting to cut, things are getting better, labor market's improving, CPI has been going lower, trending lower inflation. But the scary part is when this turns, when we turn the printing press back on, this potentially bottoms out inflation and we start to get higher again, and it's not good. And this is why things get really bad. Like if we look in the next 1 to 2 to 5 years, if we experience this new resurgence in inflation, you thought 2020 was bad, it's going to be worse. And then we try to tame that, and then we do the same thing again. And then if we get this final leg of inflation, it's the worst. Like that's talking about full on like fiscal crisis, and there's no liquidity, and that's like crazy, depressing, recessionary, that's depression stuff. So are we there yet? No. But I don't know. I'll find the podcast. It is depressing. I'll just give you that heads up right now. It is depressing. But I would rather feel like there's some action to take for the next 5 to 10 years of investing to protect yourself versus all of a sudden it's like, what do I do? It's all hopeless. It's going to be a shit show. We don't know. So anyway, Angela says, yeah, I moved from Metro Detroit to rural Michigan. Same, mine almost doubled. Yeah, I mean, I had a Michigan policy. I moved out to Utah with all these different discounts. There was like, Safe Driver this, and I put in the smart, whatever the Snapchat thing, whatever the heck it's called, smart chat, where it's like it's on my phone and it communicates with my car. And so if I'm driving safe and not speeding and not an idiot behind the wheel, then I save like 20 to 25%, which I'm already saving. But doesn't matter because the policy started off like double in price. So I'm not real pleased with it, to say the least. But it's a joke. And meanwhile, you look at Progressive. What's Progressive stock price? Oh, I don't know. All time freaking highs. Look at this thing. Since the bottom here in summer of 2023, Progressive stock has gone up 134%. I don't know if any other stock since summer of 2023 has gone up as much as Progressive, without maybe being a semiconductor or without being some freaking penny stock biotech garbage. This is insane. And it doesn't look like there's any sign of stopping. And actually, post market, it's up $6. So, is it something I want to trade right now? Not really. Do I want to sell it? No. but it's wild how it's just ripped. And what is it about summer of 2023 to now? Nothing, just more expensive policies that people are forced to pay because you have to have insurance. So that mandate is garbage. Anyway, whatever. Okay, I'll let you go. So Harry, you good? I was looking at the correlation. I think that if I take this chart right here, let's go to US oil. Okay, take this chart on oil and bring up that little screenshot right here. Something off fudge. I got that in the way. This is what I was trying to show. Let's go to the daily. Okay, look at this. To this. This is what I'm trying to show. So inflation versus oil. When oil topped, inflation topped. When oil has been declined, inflation's been declining. We're starting to spike up. Starting to spike up. I do think there's actually a strong correlation right there. So something to not overlook. And like I said, this may have shown the bottom. And our CPI that we have forecasted for next week, I think it's on Wednesday, it might show a good number. I don't think the forecast is out right now, but if we go to next week's inflation, let's go to next week here. I go to Thursday. Yeah, Thursday the 10th is CPI. So we have month over month core CPI year over year. The previous was 2.5 year over year. There's no forecast right now. I am curious if this is going to forecast like a 2.3 or 2.2 and actually get it. But then that's going to be like the lowest print that we see. And that might be enough to get the market all excited. You know, October 10th, does it get us through the election? No, it doesn't. But after the election, getting into the typical Q4 seasonality, maybe the market doesn't care about inflation at that point. You know, just for at least the rest of the year, maybe it doesn't really impact the markets. But coming into Q1 of next year, Q2 of next year, if we are seeing month after month after month print higher year-over-year inflation, that's going to be a problem. So we will see. But just keep trading, just keep grinding, little by little. We do our best. All right, everybody. Thanks for being with me today. If you are joining from YouTube or Facebook or LinkedIn or Twitter, you know, you can do your part. You know, if you subscribe to my channels or whatever, that's great. You know, I've got a Discord, I've got a Telegram. I'll share those. Those channels keep growing organically. So I'll pop that in the chat if anyone's interested. Free Telegram. I've got to update my kind of closing bell stuff here in just a minute. So here is my Telegram. So Chris Pulver Telegram. There we go. And then in my Discord, here is my Discord. Chris Pulver Trading Discord. So free channels to follow along. All good stuff there. And the only thing I say is disclaimer, if you join my Discord channel, I do not send friend requests. I do not send private messages. I have an entire scammer channel dedicated to anybody that sends me stuff. Hey, Chris, is this you? Is this you? No, it's not me. No, it's not me. They all try. It's my name with an extra R. It's my name with an extra L. It's with a period. It's with a dash. It's with an underscore. It's not me. I will not message you. I will not initiate a conversation. So just report that stuff, flag it, ban it. I hate it. It's something I've got to deal with, and it's annoying. But you know, the safest place to find me is in the public chat every single day. Okay. All right. Other than that, I'll let you go. So feel free to jump into the Discord, jump into the Telegram channel. I'll write up my little summary for today. Tomorrow morning, I'll be live at 9 a.m. So more live sessions this week. 9 a.m. Eastern time will be my daily profit play. That's going to be for members only. 10:15 a.m. Eastern time is going to be me. So CP plus A1 trading. And then 3 p.m. will be my final hour, just like today. Okay, and I'll be live right there. So I appreciate it. Leave a thumbs up, like, subscribe, all that good stuff. You know the deal. That helps the algorithm. Let more people find the channel. And appreciate you being here. And have a good rest of the day. I'll see you tomorrow.